We're joined by Stephen King, the Chief Economist at HSBC. Stephen, 0.4% drop. Are you going to have to revise downwards your forecast for the year?
We'll have to look at the numbers with some greater detail later on, because the big problem here is we have no detail really as to what's driving the weakness in this particular release. What we do know is that the August industrial production numbers were incredibly weak. They often are revised after the event, so it's possible that we'll find that the first estimate of GDP, as with the first estimate of the manufacturing numbers in August, might be revised up a little bit from where we are currently. But there's no doubt about it. These are very disappointing numbers. They suggest that the recovery that people were hoping to see is not really coming through at this stage. It may be that we've seen more destocking coming through in the third quarter. It may be that investment was a lot weaker, that the consumer recovery isn't yet coming through. But it simply illustrates the fact that in the UK there has to be a rebalancing. There has to be much more focus on exports, and of course that's one of the reasons why sterling has been looking pretty weak over the last few months, because it's the only way in which we can really kickstart the economy at all.
Stephen, our economics editor David also has a couple of questions for you.
Yeah, hi Stephen. One of the things that we could get out of there, we saw a drop in services, hotel, catering, those numbers look bad. Obviously the consumer's under pressure, IP and manufacturing. But looking at that rebalancing that you're talking about, I mean the consumer here in the UK is going to remain under pressure for quite some time, right?
Yeah, that's absolutely true. I mean, the kind of headwinds in front of UK consumption are pretty sizable. Not only have you got the fact that households have got still huge amounts of debt, but you've also got coming next year, whether it's under the Tories or under Labour, a huge amount of fiscal tightening to come through, and the combination of tax increases and big cutbacks in public spending, which in turn will be including big squeezes in terms of public sector wages. So the fact of the matter is that from the point of view of the domestic economy, austerity beckons for the next few years, and with austerity comes continued very weak domestic demand. It just puts the emphasis once again on the fact that to get out of this mess, exports have to play a bigger role, and that's why I think the Bank of England is pretty relaxed about the decline of sterling.
Can I just ask you also, I mean, you know, with a result like this and the economy as it's doing, I suppose you'd expect the pound to be pretty much the same sort of levels that it is. It's not going to be rebounding. What does that mean for, like, manufacturing? Will people look to invest in the UK?
Well, the good news, of course, is that for UK manufacturers who export, the fall in sterling should help in terms of their competitiveness, in terms of their pricing relative to their competitors elsewhere in the world. And of course, it's one of the supposed big advantages of the UK that it has got the flexibility that other countries in Europe don't enjoy, being members of the euro. But at the same time, the evidence from the past is actually not quite so encouraging from these periods of devaluation or depreciation, because often UK manufacturers have taken the benefits in form of higher profit margins in the short term, which is great for short-term gains, but you haven't necessarily seen a persistent increase in market share, which is ultimately what you need to see from these sterling declines. So in one sense it's helpful in terms of being a short-term palliative, but beyond that I think there's still some considerable uncertainty.
Stephen, what is the Bank of England thinking when it's looking at these numbers? Does it need to pump extra money into the economy?
Well, I think it's fair to say the Bank of England doesn't have any precise scientific calculation as to how much money to pump into the economy. What they'll be concerned about, I think, is the fact that having pumped in so much money and still seeing a decline in GDP, this will be damaging from the perspective of confidence. It'll be damaging from the perspective of trying to encourage expectations to recover. And therefore they'll be thinking very hard about whether they need to extend the QE programme, not so much because an additional 25 or 50 billion makes much difference in terms of the overall scheme of things, but rather because they need to do something to show that they, in one sense, care about the economy and that they want to make sure that it's actually beginning to improve.
Stephen King, thank you so much for joining us today. Stephen King there from HSBC.